Welcome traders, it's Vagabond Investors Special Market View May 17th. Thanks for all of you sending us tons of questions of markets during the last week. You're mainly asking if the bear market has been started, if the bull market is over. I understand you're confused. You're probably looking like charts like this, very loose, very volatile, and very difficult to read. In situation like that, I also feel confused. I understand you very well, and the way I deal with this is to step back, take a bit bigger view. I try to find out the big picture of the markets, what's happening, is there some clues of upcoming moments, or what's the name of the game. First, I like to have a look, have a view of S&P 500 index, and this is a picture from last bull market. Started at 2003 and ended at 2007. It's very useful to understand that the bull market is made of basically three well-defined stages. The stage one is the recovery from the ridiculous bear market lows. Stage two is basically stocks rise reflecting the ongoing improvement in the real economy, and the stage three is ridiculous speculation. It's a bubble market phase. And if you keep in mind the picture of these three stages, you can be more calm, you can trade better, and see where we're going at the moment. Well, basically the most important thing here is to understand that the bull market is not just one ongoing train. It's divided into stages, and there is life also between the stages. Between stage one and stage two, in 2004 there were a consolidation. It's a resting stage, also seen in 2006. This is very typical for bull markets. You run, you rest, you run, you rest, and then you run, and then it's over. That's the way it works. But to understand how the market tops and bottoms is very important. And here we can see bear market bottoming out and the stage one beginning. What's important here is this high-low indicator. It's 52-week new highs and new lows. It's a net new high, new low index. So it's indicating if the more stocks are going higher and higher, or are they going basically lower and lower. What's the market sentiment at the moment? What's going on in the markets? And as you can see here, we had a massive bullish divergence here right at the bottom of 2002 bear market, 2002-2003, forming the bottom of the bear market before the stage one of the new bull market started. Then new high-low index braked above the zero line. It continued climbing, and this consolidation period we saw new high-low index breaking below the zero line, breaking again below the zero line. It also bottomed there before the market continued its continued its ride to stage two, where ongoing improvements in real economy was the driver of the market. And also here you can see easily the bottoming of new high, new low index. Of course, here's some engine noise going on. This kind of spikes down always makes you wonder if their stage is over, but very quick return above the zero line told us that the trend is still alive and the stage is still alive and the train is still going on. And the third stage, pure speculation, very ridiculous bubble states, and very typical behavior here is bearish divergence of new high-low index. This took over a year to break the back of the bull and turn to the real bear market, but this is very clear sign here. It's having lower and lower weekly new highs. At the same time, the market goes higher and higher. And then here is a clear sign of something very bad happening on the markets. This is a loud and clear alarm bell ringing there, at least at this moment when the stage 3 is very matured and we get new high, new low numbers below the zero. Everybody should hear ring belling that it's time to get out of the markets, it's time to get it light and try to find safe place and probably initiate some shorts if the market continues lower and lower. So where are we at the moment in our recent bull market? I think we are somewhere between phase 1 and phase 2. These recent events fits together perfectly with the big picture of the nature of the bull markets. We've had very dramatic run up from the ridiculous lows of May 2009, and at the moment markets are changing its behavior. Some stocks are breaking down their 200-day moving average, and that's the way the market works. To get the weekly new high low index below the zero line, we need to see some stocks make new lows of 52 weeks and less stocks making new highs of 52 weeks. And this is the way the market makes their bottom and makes it possible to continue the next stage. There are basically two major things driving the markets. One is market sentiment and the other is earnings. And whenever the market sentiment is getting too bullish or too bearish, it indicates that some kind of short-term bounce or breakdown is very predictable there. Of course, we've got great earnings on this earnings season, but we refuse to make significant new highs. This is absolutely the signaling a topping process here, and it's very natural to see a topping process after this kind of remarkable rally we've seen during the last year.